If you take a big step back to the day before the lockdowns started, we had a normal functioning economy that was growing by, call it 2% a year. And the minute that we enforced these lockdowns, I actually think what we did was we started a supply side recession. It's what Sachs said earlier. So what does that mean? Let's just say you're a factory and you make wheels. Okay, just make something really simple. You were growing at 2% a year. Everything seemed hunky-dory. You had employees. It was fine. You used to sell your products, make 10, 15% profits. Everything was fine. And then the day after, the government said, you need to shut your factory down because we can't have people spending too much time close together because we need to get a handle on this pandemic. Okay, so you shut it down. And then for the next 12 or 18 months, what happens? That stuff sits idle. These people that used to work for you get $2.5 trillion put into their bank accounts. They spend their time doing other things. And then all of a sudden people say, okay, it's time to start the factory up again. People want to buy wheels. And now all of a sudden you find that because everything all around the world was shut down, there's no rubber to make the wheels. There's no steel to make the axle. There's no people to put them all together. And so what happens? Well, prices go up because, again, you gave everybody else $2.5 trillion. So they're like, well, I used to pay $1 for your wheel. I'm willing to pay you $2 now. Just make the wheel. Give it to me before you give it to somebody else. So that is like the classic definition of a supply side recession.
There's another piece to that too, Chamath.
And sorry, just to finish the point. And the Fed basically confirmed this in the minutes that they just released today. Jason, can you just read the quote that you had in the notes?
Well, the one up top, a significant risk that elevated inflation should become entrenched if the public begins to question their resolve.
I think the point is that, we were kind of in a supply side recession, and now by raising rates to some crazy amount, the end of which we're still not sure about, may actually then trigger the demand destruction to have a demand side recession. And so I don't know that we've lived in a modern point in time where both things have been true. Right? There's been a principle of macroeconomics that everybody's always kind of debating, is this a supply side issue? Is it a demand side issue? We know that in COVID, it was a supply side issue. We took all the supply out of the market. And now we're trying to figure out when we exhaust, all of the money we've given people and we destroy demand and take the incentives for demand to go away, right? Consumer confidence is now starting to turn. What happens then? Well, we're going to figure that out in the next 6 or 9 months. But the thing is, you have both that are true. It's not as if the supply side of the economy has been fixed. It's not as if everybody is running at 100% capacity. It's not as if all the supply chain issues have been worked out.
Yep.
So I don't know. I just think it's a very complicated situation. I think people are roughly the same way. And I think their behavior is, well, if things are going to get hard, I'll deal with it in the future. But right now I have money in my pocket. And if you look at airlines and how many people are trying to travel, if you just look at like the cost of a hotel room, if you look at what's happening this summer, it does not seem like people are slowing down or tapping the brakes in any way. I do think that people are anxious to reestablish some amount of normalcy. And this is really the first summer where everybody writ large can be out and do the things that they were planning on doing.
Last year was the head fake summer, yeah.
Last year was a little bit of a head fake. And look, you have 2 years of pent up plans of, weddings. 50th anniversaries and weddings and all of this stuff that's happening. Yeah. And so I think people are really spending money. But if you look back on all the number of times consumer sentiment has dipped, that the correlation to spending patterns is so uniformly predictive as we think. I mean, I think that there's a slight positive correlation, I remember, but I don't think it's like, 0.75, 0.81. It's not that. So there's this weird preference falsification that happens when you get asked, what do you think is going to happen versus then what do you do? Yeah. And I think a lot of consumers, that's why they have, we know the data in America, like less than a month of savings or whatever those numbers are. Despite all of the sentiment analysis and all of this stuff, you would think that there'd be behavior change, but mostly people kind of just live in the moment. And, that's partly because they don't have the structural support to save or other things. But the reality is that most folks, from what they say to what they behave, there is a gap. I think that we have been in a supply side recession. That is what has caused inflation. We have to go through a process of taking all the excess money that's been put in out. And when you do that, we will destroy demand, and then that'll trigger a demand side recession. But the reason why I think that we're still in the first part of this process is because people, broadly speaking, still have a lot of savings because of all the stimulus checks. There is still a lot of money. So how will we know, maybe is the better point, when all of that excess savings has been, torn away from these people because of high prices? I suspect it's when Jason's first chart starts to close, right? So when people are, they're more motivated to re-enter the workforce. I think that's a signal. Freeberg, your signal is another one, which is when credit delinquencies really start to spike. It's because people then, tapped out their savings, then they tap their credit cards, and then all of a sudden they become delinquent. When all of those things happen, you're probably now at a point where that first phase of the supply side issues are largely done, and now you get to the demand destruction. But all of those roads, unfortunately, lead to the same conclusion, which is equities get really under pressure. There is no scenario where there's a bid to equities. Why would you buy something that has lower earnings in the future? Or why would you buy something that has a lower discount rate for profits in the future? In this case, both are true. I just don't see where all of a sudden there are these writ large mass layoffs. For example, I would believe what you're saying if the headline in the Wall Street Journal said Walmart lays off 10,000 people, right? That's not what's happening. In fact, it's the exact opposite. Walmart's like, well, we seem to have record demand. We're raising prices, and every supplier will have to pay a gas tax and a supplier tax and deal with it. So I just think that you're going to be right in the end. I just think we're way too early in this process to get to that place where we're debating this. I think that you can have inflation and a recession at the same time. This is what my point is. I think we have been in a supply side recession, meaning the day of the pandemic, it's not as if demand stopped. It's not as if you and I, David, didn't want to go out or use DoorDash or take an Uber or watch a movie in a movie theater. We were not allowed. Right. And so we found other ways in order to fulfill our demand. That's why Shopify, did so well on behalf of the merchants that they served. That's why Robinhood did so well. That's why Fortnite did so well, right? We found other places to spend money. But what went away was the supply. And those incentives didn't come back, and they're still not back. That's why prices keep going up. I think that we have an issue where we are going to transfer the supply side issues that are driving inflation to average everyday consumers and their ability to buy things. I still think that the average everyday consumer's desire to buy things is what it was from before, and on the margin is probably higher. I do think at some point it will start to change when prices get high enough. But I don't think we've reached that point of equilibrium yet. And the reason is because companies like the Walmarts of the world, who see this demand on literally a real-time basis, knows better than anybody else when and how much they can raise prices downstream into their supply chain. So when you see something like this in the Wall Street Journal, I would just encourage us all to say, they must see that demand is the same or better. And so they're going to now push those price increases down to everybody else, because now Walmart says, here is an opportunity for me to defend my earnings power. And this is why I think we're in this first inning of this. So I don't know whether Ackman is right or wrong, but I think we're in the early phases of a two-phase recession.